What if I told you that just 1 hour before a massive market crash, we called the exact move, and it played out almost to the letter? Silver's paper price dropped 10% from the 82 to 83 range, precisely as predicted in the last video, not after the fact, not some vague guess. We laid it out, time-stamped it, and the market followed the script. If you were watching, you saw it happen in real time. What's going on, everybody? OG John AG here. And before we get into today's breakdown, and trust me, there is a lot to unpack, I need to make something crystal clear. I have never, and I will never, ask you for money. No courses, no paid signals, no mentorship programs, nothing. If someone is out there using my name to sell you something, that is a scam. Period. Block them, report them, and move on. What I do here is financial warfare education. I'm not building a sales funnel. I'm building a legacy. This is about arming you with the knowledge to navigate what is happening in these markets on your own 2 feet. So if you're learning something here, if you're actually going back and verifying the data I put in front of you, drop a comment right now. Just type OG John AG. Let me know you're engaged. Let me know you're doing the work, because that's what this is about. Protect your capital, verify everything, and never ever fall for easy money promises from anybody, including me. Check the data yourself. Now let's get into what just happened, because the numbers are staggering. As of right now, silver on the Western spot market is sitting at $75. Futures are at $76. Over in Shanghai, the spot price is $82. Futures are at $85. That is a $7 premium over the West, and we're going to talk about why that matters in a minute. Gold on the Western spot is $49.34. These are live, publicly available numbers. I want you to pull them up yourself. Don't just take my word for it. Go check. Now here's the headline. In the span of roughly 90 minutes, the global markets got absolutely obliterated. We're talking about a $3.6 trillion wipeout across the board. Gold dropped 3.76%. That alone erased $1.34 trillion in value. Silver got hit even harder, down 8.5%. Wiping out $400 billion. The S&P 500 fell 1%, shedding $620 billion. The NASDAQ dropped 1.6%, losing around $600 billion. And crypto took a 3% hit, losing $70 billion. All of that in 90 minutes. Let that sink in for a second. So the obvious question is, what happened? Was this just random market chaos? Was this some kind of panic sell-off? No. This was coordinated, and it matched exactly what we laid out in the last video from a technical standpoint. If you go back and watch, we identified the 150 exponential moving average on the hourly chart as a key resistance level. We said clearly, if price stays below that level, we have the potential for a move lower. That's exactly what happened. The price couldn't break through, it rejected, and it fell hard. Anyone who understood that setup from the last video was not surprised by this move. You might not have liked it, but you were not caught off guard, and that is the difference between being prepared and being a victim. Now let's talk about the triggers, because there were several working together. First, SLV, the big silver ETF, was trading at a discount to its net asset value. When that happens, it creates an arbitrage opportunity for the banks. They can buy shares on the cheap, redeem them for physical metal, and use that physical to cover their naked short positions. It's elegant if you're a bank. It's devastating if you're a retail investor who doesn't understand the mechanics. On top of that, we saw sophisticated spoofing in the order books. Large orders being placed and pulled to create the illusion of selling pressure, driving prices down without real volume behind it. This is not conspiracy theory. This is market mechanics that have been documented over and over again. Second trigger, timing. The Shanghai Metals Exchange closes for Chinese New Year starting February 15th through the 23rd. That is 8 full days where the Eastern market goes dark. No trading, no price discovery, no physical absorption from the biggest buyers on the planet. The banks know this. They have known this for weeks. and they pushed prices down right before that window opens, knowing there will be no eastern floor under the price while Shanghai is closed. This is not a coincidence. This is a playbook. And the third piece, tomorrow's CPI data release. The consumer price index numbers are coming out, and there is a very real suspicion that certain players got early access to that data and used it to front run this crash. Think about it. You drop the price before a major economic data release, shake out weak hands, trigger stop losses, and then position yourself for whatever comes next. Whether the CPI comes in hot or cold, the damage is already done to retail traders who got flushed out tonight. Now I want to bring up something important, because this isn't just me connecting dots. James Turk, and if you don't know that name, he's been in the precious metal space for decades. He is one of the most respected voices in the industry. James Turk has put out a warning about a possible silver squeeze coming in March. This is not some random internet personality making wild claims. This is a man with decades of deep experience sounding an alarm. And here's why March matters from a number standpoint. Open interest for March silver contracts is sitting at roughly 65,000 contracts. Each contract represents 5,000 ounces. So we're looking at 325 million ounces of paper claims. Now here's the problem. The COMEX, the exchange where these contracts are supposed to be settled, has less than 100 million ounces of registered silver available for delivery. Less than 100 million ounces against 325 million ounces of paper claims. February 27th is first notice day, when contract holders can demand physical delivery. If we see anything close to the delivery levels we saw in February, where deliveries exceeded 100% of open interest, March could be a historic test of the system. The math simply does not work if enough people stand for delivery. Let's break down the technicals so you know exactly what to watch. Short term, silver is sitting at $75. The key level below us is 74. If 74 holds as support, there is a potential inverse head and shoulders pattern forming, which is a classic bullish reversal setup. If that confirms, it could be a powerful launch point for the next leg higher. But, and this is critical, if 74 fails, we are looking at a retest of the $64 lows. That is a significant drop from here, and you need to be mentally and financially prepared for that possibility. What I'm doing here is teaching you to read the tape. I am not giving you signals. I am not telling you to buy or sell at any specific price. I am teaching you to watch for a base to form, to look for displacement, to identify confluences, multiple signals lining up at the same level. And the single most important rule in this environment is do not try